Hey guys, welcome back to another episode. In this video we will be going through our very simple, yet profitable scalping trading strategy and advanced techniques that you can use in the Forex, stocks, and crypto market. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Even if you are a complete beginner in trading, you will have undoubtedly come across the term scalping at some point. It is similar to day trading in the sense that you are looking to make short-term profits throughout a trading session, but it takes place in a much faster and smaller environment. So, what is Forex scalping? Forex scalping is perhaps the riskiest trading strategy you can take up. Many avoid it and prefer to trade long-term. Some believe that due to the fast-paced nature of it, it can easily become gambling. That said, it doesn't mean you should 100% say no to it as your trading strategy of choice. When done simply and efficiently, Forex scalping can be highly profitable. If you're wondering how to start scalping, we will cover some key systems to help you determine which scalping trading strategy could work for you. And now, before you think of scalping, we should explain what it is exactly. What is a scalping trading strategy? Scalping is a method of trading based on real-time technical analysis. When it comes to Forex trading, scalping generally refers to making a large number of trades that each produce small profits. Rather than holding a position for several hours, days or weeks, the main goal of scalping is to make a profit in as little as minutes, gaining a few pips at a time. The ideal time frames for scalpers are typically 1 minute or 5 minutes. A scalping trading strategy is best used when investing in currency, though it is also popular in futures, stocks, cryptos or even commodities such as gold. Scalping is quite a popular style for many traders as it creates a lot of trading opportunities within the same day. Its popularity is largely down to the fact that, in most trading strategies, there are high chances of getting entry signals. During the scalping process, a trader usually does not expect to gain more than 100 pips or to lose more than 50 pips per trade, including the spread. In order for those 100 pip gains to add up to a substantial profit, scalping is usually performed with high volumes. By being consistent with this process, they can stand to benefit from stable, consistent profits. What is the best time frame for scalping? Do you scalp trade on the 10-second, 1-minute, 2-minute, 5-minute, or 15-minute chart? Generally, most scalping traders are scalping on the 1-minute and 5-minute charts, but there is another group of traders that are scalping on the times frame lower than 1 minute. For me, I love to scalp trade on the 1-minute chart just because it suits my trading style. I also use the MARSI or Moving Averages Relative Strength Index trading system to scalp trade on the 1-minute time frame. This Forex 1-minute scalping strategy is a good starting point for Forex beginners as it is quite a simple strategy to follow. However, you should be aware that this strategy will demand a certain amount of time and concentration. If you are not able to dedicate a few hours a day to trading, then it might not be suitable for you. Because you are only gaining a few pips a trade, it is important to pick a broker with the smallest spreads as well as the smallest commissions. The requirements for the MARSI scalping strategy are as follows. Instruments. Every currency pair. Best time frame. 1 minute. Indicators, 8 period RSI and 2 simple moving averages, or SMA 30 and 10. Preferred sessions, London and New York. While you can use this Forex scalping strategy with any currency pairs, it might be easier to use it with major currency pairs because they have the lowest available spreads. Additionally, this approach might be most effective during high volatility trading sessions, which are usually London and New York sessions. Is Forex scalping a suitable style for you? Deciding whether scalping is a suitable trading style for you will largely depend on how much time you are willing to dedicate to trading. Forex scalping requires constant analysis and the placement of multiple orders, which can end up being as demanding as a full-time job. Furthermore, there are only a few hours a day when you can scalp currency pairs. After time availability, the next most important thing is being able to think on your feet. For a Forex scalping strategy to be profitable, you must quickly predict where the market will go and then open and close positions within a matter of seconds. When making these trading forecasts, keep in mind that herd psychology is integral to market movements. Aside from predicting market direction, traders interested in implementing Forex scalping strategies must be able to accept losses. This is particularly important when trading with leverage, which, as well as potentially amplifying profits, can have the same effect on losses. While your main task is to generate more profitable positions than losing ones, you must also know how to exit trades when they are not working out. If you think Forex scalping is for you, let's go to the next session. Best scalping trading strategy. We have provided a very simple yet profitable trading strategy and advanced techniques that you can use in the Forex and stocks market. Whether you're a beginner or expert, the best option will depend on your day trading style and goals. MARSI. Moving Average Relative Strength Index Scalping Strategy. Since this is a scalping strategy, we will be using the 1-minute chart exclusively. For those who are not yet adept to quick trading, you may use the 5-minute chart. However, that would already border more towards a day trade type of time frame. There will be advantages and disadvantages for both time frames though. The 1-minute chart will have more noise, but personally I find it easier to predict due to the short span of time I hold the trade on this time frame. The 5-minute chart will have less noise, but I find that many things could happen that could reverse the market sentiment during the span of time I hold trades on the 5-minute chart. Using the moving averages crossover as a short-term trend indicator. Because moving averages are a lagging indicator, the crossover technique may not capture exact tops and bottoms, but it can help you identify the bulk of a short-term trend. A moving average crossover helps to answer these 3 questions. First, which direction might the price be trending? Second, where might be a potential entry point for a trend trade? Third, when might a trend be ending or reversing? All you have to do is plop on a couple of moving averages on your chart and wait for a crossover. If the moving averages cross over one another, it could signal that the trend is about to change soon, thereby giving you the chance to get a better entry. By having a better entry, you have the chance to bag more pips. Let's take another look at this 1-minute chart of GBP/USD to help explain moving average crossover trading. From around 21 minutes, the pair was in a nice uptrend. It topped out at around 1.34825 before slowly heading down. We see that the 10 SMA crossed below the 30 SMA. And what happened next? A nice downtrend. Using the 8-period RSI to identify the best entry signals. Some scalping trading strategies use momentum within the market to identify the best entry and exit points. The Relative Strength Index or RSI is an oscillator, meaning it can forecast a future direction of the asset over a period of time. The RSI can be used to determine overextended prices, specifically, if the RSI is above 70, the market is overbought, and if the RSI is below 30, the market is oversold. The best way to utilize this oscillator for your scalping trading strategy is to set a 1-minute chart. Developed by J. Wells Wilder, this technical indicator assesses price trend direction and strength, allowing traders to determine if they want to enter or exit a trade, refrain from taking a trade, or add to an existing position. In this way, the indicator can be used to provide trade signals when it acts in a certain way. Using the RSI as a trade signal indicator is ideal when combined with trend indicators such as moving averages. This can help you to pick bottoms in a rally or tops in a decline. In other words, using the RSI as a trade signal indicator, you can time your entries within a trend. In this example, you have the 30 and 10-period simple moving average or SMA applied to the price chart. When the short-term simple moving average is above the long-term simple moving average, it signals an uptrend. Now, using the RSI indicator, you can see that the bullish momentum is renewed every time the 8-period RSI falls below 40, but not below 25. When the RSI indicator starts to rise back above 40, the bullish trend resumes, thus giving traders a good level to enter the trend. Make sure to set your stop loss at the swing low created by the bullish price increase and set take profit at 3 times the risk on the stop loss. For a sell entry, wait for the short-term simple moving average is below the long-term simple moving average, it signals a downtrend. And now, using the RSI indicator, you can see that the bearish momentum is renewed every time the 8-period RSI rise above 60, but not above 75. When the RSI drops back below 60, enter at the candle close corresponding to when the RSI crosses below 60. Set your stop loss at the swing high created by the bearish price thrust and set your take profit at 3 times the risk on the stop loss. Frequently asked questions. Is using a scalping trading strategy profitable? Scalping can be profitable for the experienced trader, but note that volatility in the Forex market can be unpredictable for anyone, especially when monitoring small price fluctuations. As scalping uses small time frames, traders need to be able to act quickly on trades to secure a profit in good time. Is scalping a good trading strategy? Scalping is popular among experienced traders in particular, though it generally suits anyone who can monitor the market on a constant basis and can handle a high-pressure trading environment. Beginners should be fully aware of the risks associated with scalping before committing. What is the best scalping trading strategy? The best trading strategy for scalping is down to personal preference and the investment goals of the trader. Is a scalping strategy the same as day trading? The scalping trading strategy focuses on small price movements in large volumes. Day traders will hold on to trades for a larger profit target and might use the 700 pips a day strategy using a 1-hour chart, for example. Here are other examples of the Marcy scalping trading strategy. While you can use this Marcy scalping trading strategy with any currency pairs, it might be easier to use it with major currency pairs because they have the lowest available spreads. Additionally, this approach might be most effective during high volatility trading sessions, which are usually London and New York sessions. As always, if you learned something new or if you want more videos more often, make sure you subscribe, click the notification bell and leave us a like to show your support. See you next time.